Have you ever felt maxed out, trying to see as many patients as you possibly can and still not making the income that you want? Well, guess what? You're not alone. But here's the truth. Growing your practice doesn't always mean adding more patients to your plate. In this video, I'm going to show you how tracking just a few key numbers can help you increase your income without working harder or seeing more patients. So let's dive in. Let's start with the most common issue I see in private practices. You don't know where your money's going. A lot of practice owners get so busy running their day-to-day life that they don't really review where their money is regularly going. The problem? Untracked overhead can quietly eat away at your total income. I'm talking about rent increases, staffing inefficiencies, over-ordering on supplies, and so much more. These little things can add up over time and will hurt your profitability. So how do we fix it? It's simple. Your overhead percentage ratio. This is your total operating expenses to your total revenue. A good rule of thumb is to aim for a percentage of 60 to 70%, though this does depend on your specialty. So to get started, you're going to look at your fixed versus your variable costs each month. It's so crucial to spot any trends early, and even small reductions in your overhead can add up. For example, maybe you're spending too much on your supplements, and these are supplements that are just sitting on your shelf and then they expire. Or perhaps it's time to renegotiate your lease. Remember, every penny counts. Now, if you need help finding out what your numbers are, go ahead and schedule a call with me by clicking the link in the description. And while you're at it, don't forget to click the like and subscribe so you get notified whenever I post more videos, which is weekly. So you've addressed cutting costs. But what if, despite making those adjustments, you still feel like your income's not growing? Well, the next income drain could be the money that you've already earned, but you're just not collecting. And that's often the hidden problem. I see it all the time. Incomplete payments, missed copays and deductibles, and denied claims. All these things lead to lost revenue. Usually it's due to billing issues that are either overlooked or not even being worked at all. And this is a huge issue, but it's much easier to fix than you think. Your collection rate is your percentage of billed charges that you actually collect. Ideally, you should aim for about 95%. To get there, I recommend setting up a weekly review of your collections versus your charges. Track it, measure it, and adjust. If your collection rate's low, it might be time to look at who's doing your billing. If you hire or outsource a billing specialist, first talk to them, see if you can get them to do a better job. If not, it might be time to hire a new specialist. If it's internal, it's probably time to tighten up your internal process. And if that's not working, it's time to hire a new person. Don't forget, every dollar collected is a dollar that's added to your income. You can also look at this by looking at your denial rate. This is what percentage of your claims is denied by your insurance companies. Your goal should be less than 5%. Now, let's say you've reduced your overhead costs and you've improved your collections. You should start seeing an improvement in your margins, right? Well, not always. Even with better collections and lower expenses, margins can still feel tight. So why is this? Well, it might be because your cost per visit is higher than it should be, or your revenue per visit isn't high enough. Here's the thing. Some appointments cost more than they're worth when you factor in staff time, resources, and supplies used. Most people wouldn't even notice this unless they actually sat down and broke it out. Now, you can figure this out by dividing your monthly expenses by the number of visits you see. Then compare that to the revenue per visit. Are you bringing in enough to cover all your overhead costs? To improve this, start by any high costs or low revenue visits. Maybe you're getting appointments that take up a lot of time, but they're not bringing in a lot of revenue. If that's the case, it might be time to streamline your schedule or reduce no-shows. Another idea would be to include more things you can talk about with the patient that relate to the patients, but then also you can bill for through their insurance companies. So maybe like talk about weight loss or tobacco use or anything else that's related to them that's a billable thing. So here's the bottom line. You don't need more patients. You need to look at these three areas: your overhead percentage, your net collection rate or your denial rate, and your cost per revenue per visit. Tracking and acting on these numbers will lead to higher profits without working harder or burning out. Remember, it's all about working smarter, not farther. Thank y'all for watching, and remember, you can book a strategy call with me through the link in the description. And if you're not quite ready for the call, check out this video on what KPIs every private practice or med spa should know. It's a great next step to building a more efficient and profitable business. Thanks again for tuning in, and I'll see you in the next video.